Well, hello everyone, and welcome. It's day 3 of the Group of 78's conference on transforming international finance toward economic, social, and planetary justice. On day 1, last Friday, we heard that a fair transition from a fossil fuel economy is entirely feasible and manageable. We heard that more active public policies and more effective multilateral institutions are key if we are to roll back financialization and meet our global economic, social, and ecological goals. And we heard from Senator Rosa Galvez that in Canada, there is an active legislative proposal to align finance with our climate commitments. That was day 1. Yesterday, day 2, we discussed the international currency system with presentations explaining the hegemony of the US dollar and the possibilities of using the special drawing right, the SDR, much more widely as a reserve asset, particularly to meet the climate challenges faced by developing countries. Today, we shift focus to the potential importance of national financial systems, institutions, and policies in an interconnected world. What scope is there for using domestic instruments in a more active and greater way to meet national, economic, and social and environmental challenges? So we have 3 distinguished speakers and a distinguished moderator in Peter Venton to manage this discussion. Peter, who I'll introduce now, is an economist and lead of the Canadian Pugwash Group's Global Issues Project, which focuses on socioeconomic and environmental threats to human security. Prior to his retirement in 2009, Peter was a senior economist in the Ontario government's Ministry of Finance for 25 years. He's published widely on political economy on a range of topics. His recent articles include The Political Economy of Managing Without Growth and The Politics of Climate Change Since the US Golden Age of Democracy and Capitalism. So over to you, Peter, to introduce the speaker and offer some introductory remarks.
Okay. So welcome to panel 2 on transforming banking, monetary, and fiscal policies. I'm Peter Venton, the moderator for the panel, and as Roy explained, I'm an economist and formerly senior economist in the Ontario government's Ministry of Finance for 24 years. And since my retirement, I've been researching and writing on the economics of neoliberal capitalism, the decline of democracy in the US and Canada, and the related growth of corporate political power over governments and citizen opinion. Today, we have 3 speakers whom I will introduce shortly. They'll be discussing why and how public banking can reverse some of the growth and financialization of the Canadian economy that has occurred over the last 3 decades. How that financialization has resulted from neoliberal policies of deregulation of finance and monetary policies of excessively high interest rates, and why some of Canada's state-owned corporations in banking, finance, and insurance have encouraged financialization of the Canadian economy. And also taxation and fiscal policies for achieving the broader public good. That includes, among other elements, affordable housing, less economic and social inequality, and sustainable development goals. Our first speaker, or Susan Spronk, is our first speaker. She's a professor of politics who teaches at the School of International Development and Global Studies at the University of Ottawa. She's also a research associate with the Municipal Services Project on policy alternatives for municipal service delivery in Africa, Asia, and Latin America. Susan will be speaking on public banking and municipal infrastructure with specific reference to the UN Sustainable Development Goals of water supply and sanitation. Heather Whiteside is our second speaker, and she's an associate professor of political science at the University of Waterloo and fellow at the Balsillie School of International Affairs on its campus. We're most pleased to learn that Heather is the winner of the 2020 Rick Davison Studies in Political Economy Prize for her 2020 book, Capitalist Political Economy, Thinkers and Theories. And Heather will be speaking today on public enterprise and the future of austerity. So John Anderson is our third speaker. He's currently a senior researcher with the Professional Institute of the Public Service of Canada. He holds BA and MA degrees from McGill University and taught labor studies at McMaster University for 13 years. John was once the director of the policy and research for the federal NDP Party of Canada. His major study on postal banking for the Canadian Union of Postal Workers and his large major report on that topic for the Canadian Centre for Policy Alternatives makes him eminently qualified to speak today on why postal banking is a form of public banking that can be realized in Canada. So those my introductory remarks. The first speaker will now be Susan Spronk.
Great. Thank you so much. Thank you for the invitation to be here. It's great to be here on a panel with Heather and John. I very much look forward to hearing what you have to say. Thanks to Peter for coordinating, and thanks to the invitation, G78. So today I'm going to be talking about some work that we've been doing with the Municipal Services Project. So my comments aren't going to talk about Canada, but they are going to imply Canada, because I do think that Canada has a lot to learn from other places with respect to public banks. Because if, as a Canadian listening to this webinar, you're asking yourself, what is a public bank? It's because we don't really have them in Canada, but they do play a really important role elsewhere. So I'm going to be talking today about the resurgence that public banks are enjoying in the financing for development agenda. So primarily looking at what our activities are doing in the Global South. But to note that public banks have helped mitigate the global financial crisis of 2007, 2008, 2009. And they also catalyze much needed financial investments to transition to a low carbon green economy. There's over 900 public banks in the world with $49 trillion in assets, US trillion dollars in assets. However, they're largely underestimated as an important source of funding for municipal infrastructure. So in this presentation today, I'm going to provide a brief history of public banking practices in the Global South and the North, drawing examples from the water and sanitation sector, which I've worked on for the last 20 years. I'll be sharing insights from the Municipal Services Project. I do work with colleagues, Tom Marois, who's in the UK, and Dave McDonald, who's at Kingston in Ontario, on this project. And we are working with an international team that investigates alternatives to neoliberalism. And our current project looks at the work that public banks are doing in the public water and sanitation sector. So my presentation is divided into 4 parts. I'm going to be talking to you about the Sustainable Development Goals, so how much money is needed to meet these goals, and I'm going to be talking about the targets related to water and sanitation. Where is the money going to come from? Third, why do we need a new research agenda? And fourth, how can public banks help fill this gap? So first, how much money is needed to meet the SDG number 6? So the Sustainable Development Goals were committed to by the member nations, the United Nations, in 2015 to reach certain targets by 2030. When one compares the Sustainable Development Goals to the previous set of targets, one will notice that they are very, very ambitious. For example, I fully embrace SDG number 6, which aims to achieve universal access to water and universal access to sanitation by 2030. As you will see in the graph that I've taken from a 2021 report, which is prepared by United Nations, we are not on track to meet these targets. COVID has been a large hit. Currently, about 2.2 billion people in the world, or 29% of the world population, lack access to safe, readily available water at home. and 4.2 billion people, or 55% of the world population, lack safely managed sanitation. And we can point to our own backyard where First Nations on reserve also face this problem with water and sanitation. So we are not exempt from trying to meet these targets. Sustainable Development Goal number 6 is intended to address these gaps. It'll be a very expensive undertaking. It's estimated to cost about $150 billion a year just to meet the first 2 targets, which refer to the universal water and sanitation, and much more money to meet the targets such as reducing water pollution, implementing integrated water resources management, and protecting water-related ecosystems. Those are the other aspects related to climate change. The most pressing needs, however, no doubt, are in the global south. But high-income countries are also in serious deficit situations. I just mentioned our own on Turtle Island. But in the United States, for example, requires an estimated $1 trillion over the next 20 years to meet and renew its water and sanitation infrastructure. So this has provided the opportunity, and we heard this yesterday actually, for those who were able to join the panel on the special drawing rights. One of the speakers was talking about how there's a consensus in the world community that aid is not enough. And while that's true, I think it is incumbent on us as citizens to ask questions about the public policies that are pushing privatization still as a solution to this public policy problem, rather than looking at the solutions that are already out there and are actually working. Why don't we look more at the public? So just to briefly summarize, where is the money going to come from? It is not public-private partnerships, which have been the solution that has been presented by the World Bank and the other international financial institutions. Also, we can see that at home with the Canada Infrastructure Bank, which my colleague Heather Whiteside has written a lot about. There's been estimated to be more than 1,900 large PPP agreements or public-private partnership agreements between 1987 and 2015 in the water sector. A growing number of PPPs, however, does not necessarily mean an increase in private sector spending on infrastructure. Rather, according to a report by the World Water Council and the Organization for Economic Cooperation and Development, they note in a report in 2015 that there's a shift towards more asset-light and less capital-intensive PPP models, which means that less private money is being spent now than in earlier phases of private sector engagement. In this model, capital spending is a responsibility of the public sector, while private companies focus on operating expenses. And a quick way to remember what that means is it means privatize the profit, socialize the risk, because private companies make off with profits when they're available, and the public sector is left holding the bag, particularly when these PPP contracts get renegotiated or go wrong. We've seen so many different cases in the water and sanitation sector over the last 2 decades. So in a paper that I wrote with Tom and David, we also explore, okay, private banks, they have tons of money. So of course, everyone's optimistic. We can go get that money. We can go solicit the help of private equity funds. However, the vast majority of funding in the water and sanitation sector continues to be public for the reason that private banks have more or less abandoned the water and sanitation sector. Those who remain have found it less profitable, and their customers are finding it more expensive. And of course, this has led to a lot of contestation in the sector in terms of social movement pushback. Financialization, which is a topic of this conference, has also exacerbated the trend, as nearly 4 decades of financial liberalization have opened up a world market of short-term, high-return opportunities in which private banks can invest. And for those of you who like to think about economics concepts, of course, water and sanitation are lumpy investments where the costs are really high upfront, and it takes a long time to recoup money from water and sanitation because of the fact that the people who are the customers who are out there that aren't currently being served are generally poor people who cannot afford to pay high prices for water and sanitation. So in short, there's a shortage of bankable projects, or what would be called bankable projects, and credit-worthy water businesses and institutions in the sector. Official development finance is not going to do it either. Canada has not lived up to its commitments of 0.7% of our gross national income, which was committed to in 1970. We're hovering at about 0.3%. The only countries that have made it include some of the Nordic countries. So there is not currently enough official development finance to fill the gap. But however, most of the money, for example, Canada's money that's going to water and sanitation in the global south, most of this is funneled through international financial institutions, particularly the World Bank Group, which is a leader in the sector. And they act as a gatekeeper on policy. So while they're a minor player in terms of the actual finance that they are providing, they have a disproportionate influence due to what is known as their halo effect on other lenders. That is, what they say in all their reports is what tends to end up as policy. The World Bank and the other international financial institutions have used this power to promote private financing, including blended models of financing, which is basically another word for PPPs. As of 2016, at least, more than 70% of the financing in the sector was delivered in the form of conditional loans, making loans conditional upon some form of private sector engagement or profit-making private sector. So again, not PPPs, not private banks, not official development finance, which includes official development assistance. Most of the money that, or most of the financing that currently exists in the sector is public financing. So I think we need to know much more than we do right now about what public banks are doing and as a major source of public money to fund the sector. So this is recognized by the World Water Council and the OECD, for example. According to the high-level panel on water, private money can rarely substitute for public finance in major water infrastructure. It can only be a junior partner in most cases, and even then will need comforts of various kinds. And as studied by a survey of 25 countries by the United Nations in about 5 years ago, this report was published, demonstrated that 90% of water budgets come from a combination of cost recovery, meaning people who pay fees for the services, and government spending, that is grants, investments, major public investments from the public purse. Only 8% comes from repayable finance and 2% from external sources, meaning development aid, or such as aid, I should say. So upshot, 90% comes from either the users themselves or from governments as it is. So why don't we focus much more on that aspect of the problem? So that leads us to conclude that we need a new research agenda. There's a really useful study that was done in 2017, published by Kamari and Sharma, and I quote it here. And they did a literature review of the academic and policy literature on financing water and sanitation, which demonstrated that this literature, when you go look it up on Google Scholar, for example, or whatever search engine you like to use, 53% of what you'll find is on public-private partnerships. And again, those are minor players. I just showed you where the money is coming from. 90% is coming from public sources and users themselves. 11% from foreign direct investment, 13% from private investments, and 5% of these studies are on public investment. So when public investment, again, is the majority of what's supporting the sector, why is it that scholars and activists are obsessed with privatization and continue to almost exclusively publish on that topic? This is one of the reasons the Municipal Services Project in the last 15 years has really been focused on the question of alternatives. And I'm really excited today to hear more, again, from my panelists, including John Anderson, who's going to talk to us about postal banks, which is one of the possible kinds of alternatives. So we're working using the framework of my colleague, Tom Marois. And so he published a book last year by Cambridge University Press, and I put the cover of it there for your reference. You can go find it online. I encourage you to go directly to Cambridge website in order to do your purchasing. And so public banks, we define as financial institutions that are majority owned by the state or by some other public entity, or governed under public law or by public authorities, or that function according to binding public mandate or any combination thereof. They operate at municipal, national, and even international levels. One of the things that we seek to demonstrate in the work that we've been doing is that public banks function according to different logics under different mandates. Of course, public banks have been around since about 1600. So they are not new, but again, they've faced a dip and then a resurgence again in the context of the most recent financial meltdown of the world economy. Some of them have explicit profit maximizing mandates. So there's banks that we would see as less public, even though they're publicly owned and operated. And these would include the Canada Infrastructure Bank, which I've already previously mentioned, which again, it's public, but it's using its mandate to promote PPPs rather than publicly owned and operated services. There's others, however, whom profits are secondary to development and which support the provisioning of what is known as more patient finance, or finance that has horizons or interest rate schemes that are preferential for the public sector. And this is the case with several Brazilian, Indian, and German public banks. And I encourage you to look at the case studies that Tom Marois discussed in his book. Still others have mandates which put social returns on par with financial ones. And to name a couple of examples that Tom discusses in his book, include the Banco Popular of Costa Rica, which is in fact owned by workers. And also he mentions the Council of Europe Development Bank as another one, which has strong social mandate within its public mandate. So as my colleague Tom Marois puts it, because one might think as progressive, like, why do we need to think about public banks? He says we need to take these banks seriously, even though they are problematic, and many of them are not ones that we would want to endorse as alternatives. But Tom argues that there really is no option. We cannot simply allocate questions of money, finance, and credit to neoliberals and the private sector. We cannot do anything until we have control over money. So building on Tom's work at the Municipal Services Project, we've been doing case studies from Europe that just came out in a special issue of Waterloo International. You can find all of this on our website. It is not behind a paywall. And we demonstrate in these case studies, we've looked at banks in the Netherlands, the Nordic countries, Portugal. I wrote the case study on France with another colleague. We've also looked at Turkey, and as well as the lending activities of the German KfW, which is their large development bank in Latin America, as well as the European Investment Bank, which is one of the larger European investment banks, development banks. What these case studies demonstrate is that while by no means applicable to all public banks, there is growing empirical evidence that they can function in the public interest and according to a public purpose in a number of important ways. So the first one here is they can provide long-term and low-cost financing. They can provide less financialized place-based lending or act as place-based lending institutions. They can act in a counter-cyclical fashion and also help out public utilities, public operators during the times of crisis. We see in their programs as well that we looked at in these case studies that they fund decarbonization and ecologically sustainable projects, and also act as policy partners of government and community, and importantly, act as hubs of knowledge, expertise, and development networks. And the last point, as political and economic counterweights to mainstream financial institutions. So I'll stop there, and I hope that there are a number of questions. Just to make a plug for a conference that we are organizing, it's going to take place on Friday, October 14th. Heather Whiteside is one of the speakers at this conference. There are a few spaces left, and if you are interested in joining us, this conference, we're going to have speakers from all over the world, Europe, the United States, including someone from a municipal movement in San Francisco, who is part of something called the San Francisco Public Bank Coalition. And they are lobbying to create a public bank in their city in order to address racial reparations with Black and Brown communities, including questions such as housing. So again, we see some vibrant movements emerging in the North America around these questions. There's also interest in British Columbia right now, where Tom is working with people in the British Columbia government who are interested in potentially creating a public bank in that province. So if you'd like to join us, please write me an email and I can see if I can hook you up. Or if you have any other questions, just to plug for our website, that all of the things that we publish are available online and for free. You can find all of our books, all of our journal articles, everything on that website. So please do check it out. And thanks very much.
Oh, thank you very much, Susan, for that tour de raison on public banks. Really quite amazing. I'm impressed, particularly with Costa Rica's public banking arrangements, but I'll have more questions later on. So now I would like to introduce our second speaker, Heather Whiteside, who, as I said, is going to speak on public enterprise and the future of austerity. So over to you, Heather.
Thanks, Peter. And yeah, thanks to the organizers for inviting me. And Susan, that was really excellent. I do think I agree that Canada has a lot to learn from elsewhere, especially around public banks. But I was also, just on kind of like a personal note, your new research agenda item was interesting to me. Speaking about the P3 obsession, as someone that's spent a lot of time doing research and writing on P3s, I very much take your point. So guilty as charged there. And I think, though, what I have to say today and some sort of new research that I've been doing, connects very well to what you started, the conversation that you started. And so I'll pick up on this issue then of public banking and public enterprise by talking today about a little bit about how Canadian public ownership has changed over the past few decades, and how state-owned enterprises, and if I ever say SOEs, I'm talking about state-owned enterprises. I'll try to avoid acronyms though. How SOEs in areas related to banking, finance, insurance, and real estate can be transformed to better serve public purposes like combating austerity and meeting other social obligations. And so just to start then on a sort of academic or sort of scholarly note, there's a larger context here, I guess, that we might say relates to this global rise of what's being called the new state capitalism. In contrast to late 20th century privatization and austerity, about which much has been written, and I mean, these dynamics still continue, but some say that the past few decades, specifically after 2008, have been a time of new state capitalism. And so what this does is feature the reinvigoration of public ownership, reassertion of market intervention, and development of more robust circuits of public finance. And so, as I said, this is made evident post-2008. It's obviously very clear in the context of the pandemic as well. And some sort of signatures of this is a resurgence of state-owned enterprises and sovereign wealth funds, and how these tools or these institutions are used in different ways by countries around the world, like emerging market countries, but also within the liberal heartland and amongst what are sometimes considered like illiberal countries, like ranging from China to the Gulf states. So this new state capitalism is said to differ from these earlier initiatives that we might think of in Canada with, the kind of more traditional crown corporation, where in the past, public corporations may have been mobilized to explicitly meet social objectives, like providing rural and remote development, building up markets, redistributing dividends, this kind of thing. Instead, what we see increasingly today is public enterprise that's enabling financial market profit making, i.e. financialization, or making investments or taking investments that don't necessarily focus in any way on the improvement of public services or support for the public at large. And so these state-owned enterprises are promoting financialization in themselves, entities of that are being financialized, as well as promoting privatization and other aspects of the public sector, et cetera. Okay, so but in short, in Canada, as maybe those of you that are familiar with this context would already know, crown corporations have been integral to the development of capitalism over many stages, and we see hundreds of crown corporations existing at all levels of government, and covering a wide swath of activities, things that are of interest to our panel today, like banking, but also banking and finance, but also in areas like gambling, energy, insurance, land, liquor, and lottery, mining, pensions, public works, research, telecommunications, transportation, and the list goes on. So there's a range of sectors. There's many purposes. State ownership rather is a dynamic, historical process. But I will just focus today on the ones that are related to our themes. And I just have to say a little bit about privatization, of course. And so that, so we probably are all familiar with some of the more big ticket privatizations, these big household names that were sold off in the 1980s and 1990s, whether it's like Canadian National Railways or Air Canada, the provincial telephone companies, Hydro, Petro-Canada, et cetera. And there were many reasons behind or urging, I guess, or justifying, so to speak, those privatizations. And so austerity is deeply implicated here. This has motivated governments to use privatization as a way of reducing debt, or at least a kind of smokescreen for this type of maneuver. There's also ideological biases against state involvement in the economy, seeing this as harmful for growth because it so-called crowds out private sector investment. And then this sort of historical amnesia where these earlier efforts, like say in the 1970s, to commercialize crown corporations, state-owned enterprise, then lays the groundwork for subsequent decades where those on the right can argue that state-owned enterprise no longer serves a public purpose, so therefore why retain it within the public sector. And all of those dynamics, even if there's a historical basis, that they remain powerful today. So obviously that's an important aspect of the puzzle. But public ownership endures. The state-owned enterprises that remain and some that were recently created continue to play an integral role in Canadian state capitalism. Some obvious examples include the Bank of Canada, the Canada Mortgage and Housing Corporation, Export Development Canada, Business Development Bank of Canada, Canada Lands Company, Canada Pension Plan, Canada Deposit Insurance Corporation, and then this much more recently created Canada Infrastructure Bank that itself replaced a Crown Corporation, also sort of equally recently created, called PPP Canada. And as Susan mentioned, I'll say more about the Canada Infrastructure Bank at that conference in Ottawa on October 14th. So I won't come back to that unless anyone has any questions about the Canada Infrastructure Bank. But what I just want to do in the time that remains is say a little bit more about state capitalism in the area of banking, finance, and insurance, and how despite austerity for many public sector budgets and wage restraint for public sector workers, these state-owned enterprises that I'm going to discuss and others that I don't have time for really appear to be quite awash in capital and or fully capable of supporting capital. So this then offers the opportunity for thinking up, creatively coming up with solutions for redistributing revenue or earnings, and for redesigning some of the mandates and purposes of these public corporations. And then, so then I'll kind of conclude with a little bit more on how to reclaim the broader public interest. So just to say a little bit about a few examples. So the Canada Mortgage and Housing Corporation is the largest asset holding Crown Corporation in Canada. It has nearly 300 billion in assets. But it's had some notable transformations over the years. It was created in 1946 to help war veterans with housing services. By the 1950s, it was doing urban housing renewal and helping with municipal low-cost housing. By the 90s, it was providing household mortgage underwriting services and down payment assistance for first-time homebuyers, and selling Canada mortgage bonds. And so with the mandatory mortgage loan insurance scheme that we have in Canada, the CMHC continues to play a vital role in stabilizing the the housing market and financial sector. And the CMHC has been mobilized to address crises too. And so their insured mortgage purchase program committed over 100 billion Canadian dollars in liquidity support to lenders during the 2008 meltdown. So that's a lot of money and a lot of different roles that it's played over the years. There's no reason why it couldn't do more progressive things in the future. Export Development Canada and Business Development Bank of Canada also provided liquidity assistance during the 2008 crisis, and they provided banking sector guarantees of about 200 billion Canadian dollars. And today, these two companies, EDC and BDC, continue their longstanding focus on providing financing credit and support to Canadian exporters and Canadian businesses. And so this includes advisory services and venture capital, insurance, et cetera. But sort of like CMHC that I mentioned a moment ago, they were created in the 40s, in 1944, and what their mandates were at that time was to assist with post-war economic transition and stimulus. And more recently then, EDC, Export Development Canada, helped the Crown Corporation Trans Mountain Corporation buy the Trans Mountain Pipeline by providing them with a $4.5 billion loan guarantee. So that's a lot of money for a very controversial end. And that money could definitely have been redistributed elsewhere. Trans Mountain Corporation itself is a wholly owned subsidiary of another important player in the state-owned enterprise constellation in Canada, and that's the Canadian Development Investment Corporation. But another CDIC, the Canadian Deposit Insurance Corporation, was created in 1967 to protect Canadian deposits in the case of a banking failure. And then in 2017, it was designated the Resolution Authority for Canada's largest private banks. So it now resolves banking sector issues and where these banks have to submit then their resolution plans to CDIC. So it plays an important regulatory role. Last but not least, the last item that I'll mention here is the Canada Pension Plan. This was created by the federal government in 1965. Contributions are mandatory for those over 18. But of course, pension is an area that's of shared jurisdiction. So some provinces can opt out, like we see in Quebec, and they have their own programs. The CPP, though, like an important item moving forward, but also of a historical context, is that it used to invest its savings, invest its money or support finance, I guess, through Canadians' pooled savings by purchasing provincial government bonds that were used to then deliver infrastructure. But as of 1997, it's been reconfigured through the Canada Pension Plan Investment Board, and so it now makes equity investments in privatized infrastructure around the world, seeks to maximize financial returns, often to the detriment of Canadian domestic development as privatization proceeds through public-private partnerships. Okay, so in short, the financial and commercially oriented Crown corporations in Canada form an interlocking web of services for both public and private sectors. These companies have changed over the years in many ways, but I mean, one of the most notable cross-cutting themes is that their social objectives have been substantially narrowed. So I guess what I'd like to add is, of course, an endorsement for public ownership and kind of novel, innovative ways of thinking around public bankings, et cetera. But also that at the same time, I'd just like to add that we can't ignore these more negative, I guess, aspects of public enterprise, or at least the way that public enterprise has been developing as of late. And so these are items like pushing privatization and financialization. So moving forward and connecting with the title of the session, transforming banking, monetary and fiscal policies. Clearly, the purposes and activities of public enterprise have to be realigned to challenge fiscal restraint and clawbacks. So kind of in line with what Susan was mentioning about the cases from Europe, public enterprise could be repurposed to serve the broader public good, maybe by taking its cues from the past, but just sort of generally by opening up to providing funds for social services, to circumvent the imminent pressures of austerity, to connect development policies to fiscal policies, to fund public investment in national projects, potentially earned through revenue from public ownership, like commercialization in some areas could then generate revenue that's redistributed to others, but it could also be through floating bonds, which they already do for other aspects like buying the Trans Mountain Pipeline, et cetera, or providing underwriting and insurance for households or for perhaps other governments or that type of thing. But as it currently stands, and this fiscal finance dimension of state ownership tends to align with the interests of capital, particularly in the wake of crises, which then connects taxpayers, of course, to these sort of market actors or market instability through bailouts and other financial guarantees. But state ownership could instead provide an opportunity to address deleterious economic outcomes through their governance practices. Like we have to look at how their boards are constituted, what types of hiring practices, progressive or otherwise, I guess they're up to, how they do consultation or for how they hire consultants and who is consulted, their mandates, what their sort of marching orders are. And they can do things like, provide harmonized urban and rural operations and provide non-market income support, like in the areas of social infrastructure and services that also, generate revenue and transmit dividends to then counter real or perceived moments of austerity. I'll leave it at there. Thank you.
So thanks very much, Heather, for that another tour de force work on this. Some very interesting things in these organizations, and I'll come back to that with some questions at the end. But now I'd like to introduce or turn it over to our third speaker, John Anderson.
Sorry, I just got to change the viewpoint here.
If you hit the home button at the top menu, it should bring up the slideshow option or the little play or the slideshow.
Do you see my screen now?
We can see all the slides waiting in the deck, and okay. We can see your screen, but it's not on slideshow mode.
Yeah. Okay.
Yeah. Or it's a slideshow thing in the main menu.
Yeah.
At the top there, it says slideshow, I think.
Yeah, I just can't find that.
Yeah, so you're in home right now. If you scroll to the right from home to insert, draw, design, keep going a bit, and you'll hit slideshow, next to animations.
Somehow I've got a big bar. Wait a minute, here we go.
Yeah, there you go. From beginning.
Here we go.
All right.
Okay. Do you see that now?
Yeah, it's great. Wonderful. Good job.
Great. Fine. Sorry about that. Okay. So Hello, everybody. I have worked on postal banking for quite a while now. First of all, with the Canadian Union of Postal Workers, but also with the Canadian Postmasters and Assistants Association, which is the other major postal union, and it does studies for both of them on postal banking. So I wanted to start out by essentially looking at those are the studies I've done, and I now work for PIPS, which is the Federal Government Civil Servants Union, and the union I work for has its OSFI, which is the organization who regulates banks, is formed from our members. We're very proud to represent those members doing that. So I've got a lot of studies I've done on postal banking. I wanted to start out just very quickly by saying, of course, that the elephant in the room is the private sector banks, the big banks in Canada, which are incredibly profitable and have made, almost outrageous profits over the past period of time. I think we're looking at, huge profits. Royal Bank, 16 billion, Toronto Dominion, 14 billion, etc. And they only paid, and of course these are the profits after tax. They only paid a total of 12.5 billion in taxes. Yeah. The other thing I wanted to say is that bank branches have been closing at a rapid rate. So in 2014, there were 6,348 bank branches. By 2017, it was down to 5,907. And in 2020, which is the last year that the Canadian Bankers Association published stats for, it's down to 5,783. It's important to note that these closures of almost 600 bank branches, probably 600 by now, because it doesn't have the last 2 years, are very hard hitting to a lot of communities. First of all, many communities no longer have, or maybe never had, a bank or a credit union, and it's about 1,200 of them. And a study that I did found that many towns did not have any bank branches of small towns and rural communities that had a post office. Also, when we look at Indigenous localities across Canada, only about 66 have a bank or a credit union. And that includes the First Nations Bank, which is the only Indigenous-owned bank. Banks are still closing all over the place. And 2020, the Bank of Montreal closed 134 branches. 2021, TDs closed 81. RBC in Merrickville, which is quite near here, is closing in 2023. And that's the only bank in town. The most, of course, outrageous one is the Bank of Nova Scotia in Grand Manan in New Brunswick, which is closing in January 23. It's the only bank on the island. In order to get to a bank, residents have to go through the United States and then back through into Canada to get to a bank. Credit unions have also been closing. And I worked for the cooperative movement for many years, which includes credit unions, of course. And I'm very sad to see that credit unions have also been closing at a rapid rate. And in fact, in 2002, and this includes the Caisse Populaire, which are the French francophone form of credit unions, there was 3,603 locations. And it's now down to 2,336. That includes both the Anglophone credit unions and the Francophone credit unions. So there's huge cutbacks in credit unions. And what has this created is the branchless, the unbanked, are branchless. They're underbanked. Many people do not even have a checking or savings account. And the study was done. Who are those people? And 28% are unemployed, retired, or unable to work. Many have, fairly low income, but certain people do have a fairly large income. And why they don't have a banking account is due to a number of reasons. There's the underbanked or the unbanked completely. And 13% say they don't own a bank account because they have insufficient funds to open one. 14% prefer to keep cash at home, and 30% have security concerns with banks, which is quite an unusual answer. And what this has meant is a huge growth in the payday loan movement, where interest rates are up to 546%. I mean, these are the allowable interest rates. You must remember that the federal government during the Harper era gave the right to administer the payday loans situation to the provinces, and the provinces set up different rates, and the rates are all, $15 for $100 borrowed every 2 weeks. And if you figure that out, that is that's interest in the 300+%. So this is very, very high rates of interest. I think only Quebec really has some measures to limit the interest rates, which is still very high. So what are the alternatives to the fact that we have the private sector banks making huge profits, not serving the public, credit unions closing down, the same as banks across Canada? Well, one is revitalizing the credit union movement. And there recently was a measure which was put forward by the federal government to allow federally regulated credit unions. So there's only two actually right now: Coast Capital in BC and Uni, which is in Atlantic Canada. So that is another option to develop federal credit unions, but that has not been attractive to most credit unions because the guarantees that the provinces give to credit unions, because they regulate them and want to keep them provincial, are usually better even than what banks get in certain circumstances. There's only one state-owned bank of the typical form with bank branches that exists, and that is ATB Financial, created by Social Credit a long time ago, which still exists in Alberta and still very profitable. And there's every so often there's a debate. There was one recently about privatizing it, but it still remains quite a popular state-owned bank with branches all over the place. And this is, of course, astounding to many Canadians who think in Alberta, under a conservative government, you have this. In fact, but that is the case. And of course, it was set up because of the fact that the big banks did not want to serve Western Canada in the early days. There's also the federal banking system, which Heather has talked about, which exists out there, and a whole series of institutions which Heather went through. I would just add to one, which is also very important, which is Farm Credit Canada, which is a very important bank. And all of these banks, it's important to remember that the BDC, the EDC, Farm Credit Canada, they're all very profitable institutions. And any kind of postal banking system that we could and should build up could be linked to these institutions and could be able to offer through these institutions a full range of loans and credit to all kinds of various businesses and all kinds of individuals in terms of for a wide range of purposes for banking, and also could be used to really look at Indigenous, regional, and industrial development and infrastructure development. In other words, we already have the infrastructure which could easily, without the Infrastructure Bank of Canada, we have already an infrastructure which could be used and has been used in certain circumstances, but could be used to develop infrastructure in Canada. But I wanted to focus just a little bit on postal banking. Clearly, postal banking is one alternative which can be realized. It's one of the largest public banking systems in the world. Many countries have postal banking. Even countries like Switzerland, which has a very big and important postal bank. And someone says, well, you can't have postal banks if you have private sector banks. Well, Switzerland itself shows that is not true. With the Swiss banking system, they still have a huge postal banking system. 3 of the 100 largest banks in the world are postal banks. Postal banking functioned in Canada for 100 years, right after Confederation until 1968, when Eric Kierans, of all people, really took the lead in getting rid of postal banking. Wanted the post office to get back to core function. And of course, there's a tremendous pressure from the private sector banks to get rid of postal banking. In the US, postal banking is back on the agenda. It did exist there from 1917 to 1968. And Bernie Sanders and AOC and Elizabeth Warren, many people are on the left in the American system have been arguing for a return of postal banking. The 3 largest postal banks, which I talked about, are the Japan Post Bank, which is one of the largest banks in the world, the Postal Savings Bank of China, and La Banque Postale, which we'll come back to, in France. All those 3 are in the 100 largest banks in the world. I wanted to talk about the Banque Postale just very quickly, because not only is it one of the largest banks and serves millions of customers, and is completely 100% publicly owned, but also it has cut out a role for itself to serve both municipalities and the social economy and NGOs in France, which were underserved by the traditional private sector banks. And it also has a huge role in terms of financial education. In Canada, financial education is not done very much by banks. Only Desjardins, the credit union network in Quebec, does financial education into schools, and Van City has done some in BC. The Kiwi Bank is also an interesting one. I just wanted to mention that because it's very recent and has grown to quite a large bank in New Zealand. It used to be 100% owned by the post office, and just a few weeks ago, the New Zealand government has taken 100% ownership of the Kiwi Bank. So the Kiwi Bank now is 100% owned by the New Zealand government, but you access it largely through the postal system in New Zealand. So in Canada, we've had a history of postal banks. As I talked about, this is the postal banking headquarters in Halifax when it was first set up. There's been a large campaign for postal banking, which has been led by the unions, the Canadian Union of Postal Workers and the Canadian Postmasters and Assistants Association. There's support by 400 municipalities have passed resolutions. The NDP and Green Party have supported postal banking, and CUPW also has a campaign called Delivering Community Power, which sees the post office as hubs for all kinds of different things, including postal banking. But what's interesting just in the last year or so is that Canada Post has gone into a kind of post-Harper era. During the Harper era, while there's a large campaign for postal banking, the Canada Post under Deepak Chopra was very much opposed to postal banking, even though a study that they did showed that postal banking would be good, would be important, would be profitable. And they had opposed it. Now, the new leadership of Canada Post is into developing financial services. It is not one bank. It is a series of services. Of course, they've got credit cards, which they traditionally had. They've got MoneyGram, which they've had some form of. They've got postal money. They now have foreign money. You can buy foreign money through the post office, and all kinds of other different financial services are now being offered through the post office. Most of, if not all of these, are public-private partnerships with existing private sector firms. And this is really the model of postal banking, which the UK has used, not the French one, which is exclusively publicly owned. And of course, this model, in the end, while it offers services which are important to many communities who have no banking services at all, in the end will result in higher prices for banking products and no profits to invest in better services and community economic products. Just recently, just a week ago, Canada Post, after testing this product, has now launched it across Canada, their My Money Loan, which is a product of which you can get a loan anywhere in Canada. And it's interesting to see that the head of Canada Post has talked about that, about these financial services as improving access for all Canadians, particularly those in rural, remote, and Indigenous communities. So Canada Post has begun to change in terms of the way it sees financial services, although I would like to see financial services done in a public manner and not in the way that they're doing them now. So the new loan that they have is you can borrow up to $30,000. There are rates which are, not low as you might get from a home equity loan or something like that, but they're still much lower, way lower than than you would get in terms of any kind of payday loan service, etc. And so flexible repayments, etc. You can get one of these up to $30,000 at any post office in Canada, or else you can do it online. So I wanted to conclude by saying that it's important that the postal banking dream be kept alive. And I think that it is being kept alive by Canada Post, not in the manner which I would like to see, but I think that none of these moves that Canada Post has made are irreversible. In fact, we can move towards a system where Canada Post becomes 100% not just simply controlled by Canada Post, but 100% owned by Canada Post and offer the same services. And that has happened in some locations where services have started to be offered by a private sector institution, and then the post office has taken that over. And we can do the same in Canada and move towards that system of postal banking in partnership also with some of the existing public sector federal banks and financial institutions. So I'm going to stop there and say that this is an important institution. It can be very, very useful in fighting inequality across Canada and for regional, Indigenous, and community development. And of course, it can help to maintain and also create jobs in Canada Post. So I'm going to stop there.
Okay, well, thank you very much, John, again for such a detailed, interesting report on post office banking. I have now that we've finished the speakers, I have sort of one general question that I wanted to sort of present for all of the speakers, and it relates to the comment that the public banks or public banking has fallen out of favor with neoliberal privatization, and it's a phenomenon that appears to be set or increased beginning in the 1970s. What was the impetus for privatization in water and waste, for example, or in public rental housing, or in postal banking? It occurred to me some of the explanations might be public austerity, but there's another view. It's government inability to the complexity of management of private organizations like, say, the CNR or Air Canada, or private lobbying of government for profit in running government programs?
I could start. I'm sure my colleagues will weigh in terms of postal banking and Heather's broad expertise in terms of different sectors. But water and sanitation, I would say that it's very clear that there was a maturity of the banks, the water utilities, particularly in France, actually, which were protected by the French state, also through public banking. Actually, they were benefited from, public development bank money in their various concession loans, especially in the larger cities of France, but throughout France, where they really controlled the sector, and they were primed to take the market. And so, of course, through corporate lobbying, we see in many multilateral spaces corporate takeover that's really accelerated since the 1980s. 1990s, and pressuring different governments, especially in the G20, to start arguing for the pushing of privatization, which, that Wall Street to IMF US Treasury complex that really describes the decision making around the World Bank's policy in particular. And I think the sociologist Sarah Babb, I would argue, is one of the people who's looked at this question most carefully. So I think the rise of the corporations is one of them. And of course, this we have to acknowledge as well that the public sector was not perfect either. And when we're looking at water and sanitation, it is absolutely true that public water providers have also dealt with the problems that the private sector also has, which is that of corruption. It's called something else when it's the private sector doing it. It's like good business, basically, or having the right friends.
Until you get caught.
Yeah, and we've seen lots of really nasty stuff going on in terms of collusion amongst the big water providers over contracts. So privatization didn't solve those problems. It actually probably accelerated them. And so certainly we've seen a lot of pushback in the water sector where there is a pulling back. And now I think the new discourse is all about using this public money, including in the multilateral development banks, the bilateral banks, even the municipal banks, although they're smaller and probably have more control over what they're doing. But really to use that public money to leverage for private money. That's the whole new agenda of the World Bank. So I do think it has to do with corporate power.
So Heather?
Sure. I'll jump in. Thanks for the question. So, I think, so I've studied a fair number of state-owned enterprise privatizations in Canada at the national and provincial level. And not to sort of pass the buck, but they each were privatized under different, perhaps idiosyncratic reasons, but there is a through line. The major context was using the revenue for a kind of one-time lump sum payment that went towards debt, or at least said, was purported to go towards debt. So there was a fiscal, maybe austerity-related incentive. But I think, and then it's the other things you mentioned. It's lobbying, et cetera. But I really think there's a lot in there with the which I had already mentioned, there's a previous generation or sort of decade of commercialization that typically takes place before privatization. And so a lot of these state-owned enterprises are commercialized in, say, about the 70s. It does depend on the sector. But basically, what does that look like? Well, they're cut off, for instance, from automatic financing. They're made to operate on a profit and loss basis, et cetera. There's a lot of other forms and features. But the gist is that this runs up against then the social objectives or potential social objectives, providing below cost services. So then that generates debt. And then all of a sudden, within 10 years, these state-owned enterprises look mismanaged and riddled with debt themselves. And we just got to sort of offload these kind of, poorly functioning state-owned enterprises. But so they were sort of set up to fail, I guess, through commercialization in some cases. And if the spirit of why you're asking this question, or maybe I can editorialize why I think this question sort of matters, is that if the point is looking at whether we can simply kind of take the existing state-owned enterprises that we have and sort of definancialize them and just sort of reorient them to the public purpose, whether that's feasible without actually kind of significant transformation and addressing some of these underlying issues, some of their own underlying, perhaps debt run up or other forms of mismanagement, perhaps in the past. Like, I think that's an open question, but I think the answer is like, the model has to change. It's not just about sort of returning to some past form, but it is about somewhere along the line, it'll have to be recognized that, so like I mentioned, they're awash in capital. Well, they won't be if they're definancialized, right? For example. So anyway, these are contradictions that have to be reconciled. But I think those two items, the previous commercialization and then the austerity kind of / perception of mismanagement issue are big ones.
So, John?
Well, I would just, add to that is that in Canada, when we're talking about public banks or any form of public banking, or even any form of expanding the credit union system, which is socially owned rather than owned by shareholders, our big banks are very powerful. Canada's banks, private sector banks, the major ones, are so powerful. They stopped the credit unions from becoming federal institutions at the turn in the 1900s. They actually campaigned against that, and so the credit unions became only provincially regulated, and that was really done by the private sector banks. And we've seen, they campaigned, I'm sure, against the Ontario Savings Office, which was the other sort of large provincially owned bank, which had been founded in 1922 under the very progressive Drury government. At that time, lasted in 2003. It was scrapped, and luckily, it was bought by the Desjardins, credit union in Ontario, which bought most of the assets of that. But I think that that's a factor which you have to deal with. And certainly, what now the strategy of the big banks vis-a-vis the post office is to get in there and say, okay, don't you offer the product? We'll offer that in partnership with you. So TD offering the loans, foreign currency offered by CIBC. And some of the other products there, credit cards offered by another private institution. So that they sort of changed their atmosphere. Okay, the people do need public services at the post offices. Financial services at the post offices, but we'll make sure that we offer them. And so this is also something which we have to see, that this is a sort of change in strategy a little bit by the private banks.
Okay, thank you. I have one other question. I think it relates maybe to an issue that Roy has mentioned. This is my favorite: housing affordability. Having worked in Treasury on this issue for quite some time, with the current housing crisis, the urban housing crisis that we have in Toronto, Vancouver, mostly, a solution, which I've often thought would be to have the municipality run not-for-profit housing programs. That is to say, they would invest in the construction of housing and more particularly the location of it, and it would be publicly financed, except that they can change the municipal tax rate by splitting property by separating the land from structures, which turns the property tax into a progressive tax on wealth. What's happened, the way we have it now, where we have market value assessment on residential property, what's happening is that the faster increasing of the land component is driving up the overall tax rate. But because of the way the mill rate is structured, the actual tax rate on the wealth, or the market value of the wealth, keeps going down. So it is, in effect, we have a regressive wealth tax. But that, of course, would involve a major change in tax policy. And I thought that might be one example of what Heather was suggesting, as using fiscal policy, which includes tax policy, along with public funding for social issues. In this case, massively reducing housing affordability by increasing a major increase in the supply. I don't know what you think of that, Heather.
Oh, I'm sorry. I didn't know the question was for me, but yes, I agree. I guess I would say. I mean, yeah. I don't have much more to add.
Okay. Well, I'm just. Are there any? I got to look for the questions then.
I mean, there was a question, and I thought you were sort of piggybacking on this about CMHC and kind of its role and whether it could be asked to do more. And so yeah. I guess I would just reiterate that, like, CMHC was providing for urban housing renewal in the 1950s. That's a long time ago, but there's absolutely no reason why it couldn't be doing the same today. Some version of it, like whether it's kind of direct financial support, or maybe more indirect services like underwriting, that type of thing. And yeah, so I would just echo what you were saying.
Yeah, I would just add to that, as someone who was brought up in CMHC housing in Montreal, built for veterans after the Second World War for my parents.
Yeah.
And I mean, at that time, the CMHC built hundreds of thousands of units across Canada, including all kinds, like apartment buildings. The one I was brought up was an apartment building, but they also individual homes. I think a large part of the town of Ajax, Ontario, was built by CMHC funding. And so this is something that the federal government could do again, and you know, it's not doing it. That's a problem, but it's not something which it couldn't do.
Mm-hmm. So I don't see any other questions. One of the.
There's some questions in the Q&A.
Okay, where do I get the? Oh, that's. Oh, sorry, I'm in the wrong. Right. Okay. Okay. Oh, Manfred. Just to emphasize the main point of Susan's excellent presentation, it's worth noting, in the wake of the 2008 global crisis, Paul Volcker stated publicly that if finance was to be stabilized and made to serve the public interest, all banking needs to return to the public utilities model of the 1950s. Yeah, I would agree with that. One of the problems, or one of the observations I made about CNR, for example, is it was sold off to private interests. And after that, there was a huge increase in the profits of that organization. If we capitalize those profits, the cost or the value of CNR that presumably was sold to the public would be far higher. So we have a problem in explaining public operations in terms of implied rates of return. Now, Peter McKinnon has another question. With all the closures mentioned, where did the funds from these institutions go, e.g. customer accounts and loan funds? Is that something, John, that's...
Well, the bank's rationale for closing those was, of course, those branches was to save money. And of course, that they then said, okay, you can either drive X number of kilometers, and for some people, it's hundreds of kilometers to get to your another branch, or you can do it online. And we know that the online thing, I mean, I did interviews with many mayors about this, of towns where there was no bank branch, and they had said that some of these towns, particularly in Ontario, wanted to structure themselves as retirement destinations. And then they had to tell the people who were moving there, sorry, there's no bank here. You can't go to the bank, right? You're going to have to drive 50 kilometers to get to a bank in another town. So, I mean, it certainly, has a lot of other negative features to it, not simply in terms of the bank or the customers who are using that bank, but it can have a whole feature in terms of the town's development plans when there are no banks there. I know that in terms of Indigenous development, that we had a conference about Indigenous cooperatives many years ago, and Indigenous cooperatives people had to drive hundreds of kilometers to get to a bank to deposit the funds which they received, or to look into loans, etc. So it has terrible consequences, closing branches. And I don't think that, I think that is something which the government should not allow, even now, branches to do, unless there's a real rationale for them to do that. But of course, that's not going to happen. So the alternative is postal banking.
Thank you.
Peter, can I just jump in
Sure.
to respond to your CNR point? Just before it gets kind of lost in the next round of questions. I just wanted to say, so like the CNR thing is interesting, and I think it's indicative. So almost as soon as it's privatized, what do? The private CNR, private CN rail, I guess, it sheds unprofitable track. So just sort of abandons track that it doesn't, see in its kind of business model, and it cuts a bunch of, fires a bunch of employees. And so, I mean, it's in one way, it's easy to say that it was sort of a swindle. Like CNR should not have been privatized and could have been lucrative for the government. But on the other hand, how does it operate post privatization? It operates like a very different entity with different objectives, like abandoning spur lines to remote communities. Just for that's a rail example, but. I think it's indicative too of what kind of companies are we wanting in the public sector. Might not look like the private sector companies.
Okay, thanks for that. Bruce Campbell has a question for you, Heather, on to what extent the Crown corporations have carbon emissions phase-out requirements in their mandates.
Yes, thank you for that question. So part of this research is like a new grant project, and I actually have an RA that's working right now on collecting and analyzing or doing comparative work on the mandates of the kind of the most significant, I guess, state-owned enterprises in Canada. So I've noted that, and so I don't know, but I'll have her take a closer look at that. I mean, one thing I do know is they do have forms of green procurement or sort of considerations for green light aspects. But yeah, I've added whether carbon emission phase out specifically is an item in the mandates. I'm not aware, but I mean, there's contradictions to this, like buying the Trans Mountain pipeline, for instance, and forming a Crown corporation around that. So anyway, I just wanted to say I've noted that, and thank you.
Okay. Bruce has another question for John. Eric Kieran's role in the privatization is shocking. What are the political parties' positions on postal banking, if any?
Well, I agree. Eric Kieran's was someone, before I looked into postal banking, someone I thought, oh, this is a relatively progressive, liberal spokesperson on many issues. And he was on the radio panel for many years that people might remember in the Peter Zosky show. But after he left politics. But he was a Postmaster General, 1968. And of course, this is a thesis for someone to do, because why did they shut it down, postal banking, after 100 years of operation? Well, it was also the same year that they shut it down in the United States, exactly the same year. Which I don't believe that is a coincidence. We're both going to shut down postal banking, and we have no communications between the two countries on that issue. I don't believe that's the case, but I can't prove that. Someone has to do the research. Yeah. And then what are the political parties on postal banking right now? Well, right now, of course, the Conservative Party is opposed, has been opposed. The NDP and the Green Party have been in favor. The NDP in 2018 tried to get just a resolution through to do a study on postal banking, and that was defeated by Liberals and Conservatives who voted against it. So, I think that this is something which, is an ongoing, because many MPs from all of the parties, even if their party doesn't support it, they realize that postal banking could be a good thing for their community. So we've got to keep fighting on this, on postal banking, and I think we will get it sooner or later.
You know where the Liberal Party is?
Well, the Liberal Party it has been opposed to it, as opposed to postal banking. I mean, they have not been in favor of it, although some Liberal MPs have expressed interest in postal banking. But the party itself, no, has not been in favor of postal banking. And that was that 2018 vote was really the answer, where Liberals and Conservatives teamed up against the NDP. When the question was, let's do a study on postal banking at the federal level. And no, we can't even do a study on it.
So, how do I get out of this Q&A thing back to the screen? I just click on it? Oh, here we go. Sorry. So that's all of the questions we have. I don't know, Roy, whether there's any others.
There's a question from Diane McIntyre.
Oh, okay. I missed that.
It's in the queue. It's the last one in the queue.
Oh, okay.
I can read it. Do any of you have comments on the benefits that would come from proposed Senate Bill 243 by proponent Senator Rosa Galvez? We heard a presentation of this last Friday.
Yeah.
I'm not how familiar our speakers are with that bill, but it's basically about putting Canadian financial corporations in particular on a zero carbon track and enforcing it. But anyway, that's the question. If anyone of our speakers has a response.
So panelists, you want to weigh in on that?
Supportive of her bill, but that's all I would say.
I was surprised that her focus on reining in financial corporations in the climate accountability. I think that is going to be exceedingly difficult, given their propensity to game the systems, no matter what we do. But that was a sort of a different approach than public banking. It was trying to get regulate the corporations by changing the boards of directors and so on, to in effect change their mission. But I was a bit surprised at that.
But presumably the rules and regulations that would be introduced by Bill 243 would be enforced and more enforceable, most enforceable on public sector corporations. So that would be, a very much large part of the thrust of the bill, as well as federally regulated corporations such as the banks.
Yeah.
Anyway, I agree with John that this is a bill that's worth supporting, and both in the Senate and in the House as well, if it gets introduced into the House.
Yeah. Okay, well, I guess there being no other questions, we've gone past the hour by quite some time, but is there any other points that panelists would like to make, or issues that they'd like to raise?
I'd just like to remind everyone in our audience, as well as our panelists, that we have another webinar tomorrow at 12 o'clock looking at financial sector again, democratizing finance. Promises to be a very exciting one. So until then.
Okay. Well, thank you very much, panelists, for putting on a great show. And we'll, I guess, say goodbye at this point.
Okay, thanks to all.
Okay, thank you. So bye.